Welcome back, ladies and gentlemen. We are online. Official test start time 2 minutes. 5 pages, 5 paragraphs each, 5 revisions. 5 sentences per paragraph, 5 words per sentence, 5 computer spaces in between. You may use your hyper-scientific, you may use any artificial intelligence or technology, but you must show the work and share it with the class. If you do not show the work and share it with the class, I'm going to assume all you did was use technology and you will get 0 credit for it. So let's get this party started. Top of the morning, everyone. My wife already releasing her content. One of my wives. A lot of my wives are doing their social media stuff. Let's go YouTube. Let's go Bloomberg. Let's go channel. Let's go videos. Let's go Asia Trade.
All the time, life is so uncertain right now.
Tony Robbins, one of our business
Waves
partners.
of life, the storms come, they go, and I'm not sure what the hell to do. If I'm going to start my new year and have to be something.
This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Mabel Hong in Sipple. Your top stories this hour. Asia set to extend cautious gains from Wall Street as traders assess the Trump administration's latest attack on the Fed and fresh threats of tariffs for countries trading with Iran. The grand jury investigation into Jay Powell stirring unease among some Republicans as the White House insists the order did not come from the president. Also ahead, the U.S. said to be closing in on a Taiwan trade deal with reports of a tariff cut in return for new TSMC chip plants.
And I'm Stephen Engel in Shanghai for the UBS Greater China Conference, where finance and business leaders are gathering to, of course, talk all kinds of subjects, including AI, geopolitics, and, of course, China. We'll be speaking exclusively about the bank's Asia strategy with Group CEO Sergio Ermati.
This is the setup going into Asia markets today with Trump amping up the pressure on Iran with those threats of fresh tariffs, along with these continued concerns about Fed independence. And it looks like the beneficiaries of this are Asia stocks to see how futures point to the shrugging off. And perhaps also that helps the FX space. We are seeing dollar China already in the past day moving to the lowest level since 2023. We're watching Chinese stocks if the rally extends. Takaichi trade also in play today as Japan comes back from a long holiday, and that's something we're going to be tracking in the session as well, Paul.
Yeah, we saw some initial Sell America trades in the US in the early session, although it did claw back a little bit later on as the bond market tended to shrug off the potential for consequences of the DOJ subpoenaing the US Federal Reserve. Jay Powell, of course, pushing back pretty strongly on the narrative. And in terms of the Fed, we've just heard from the Federal Bank of New York President John Williams saying rates are well positioned to stabilize the labor market and bring inflation back to the central bank's 2% goal. So it looks like there might not be any great cuts coming anytime soon. And President Trump is facing rare opposition from key Republican lawmakers as federal prosecutors opened that investigation into Fed Chair Jerome Powell. Fed and economy reporter Andy Curran joins us for more from Washington. So, and how much support or otherwise is there among Republicans for this probe?
Well, there's clearly been a pushback against this threat of a criminal indictment against the Fed, for sure, Paul. We have seen key lawmakers on the Hill come out with either statements or comments showing their concerns around this whole process. The most important one, though, so far remains Senator Tillis. He's on the banking committee, which is all important for confirming whoever takes over as the next Fed chair. And he's made it clear he's not willing to confirm anyone into that position until this whole legal process is sorted reported out. He's unhappy with these charges in the first instance. Now it's new. It's a new development that President Trump has been attacking the Fed since he came back to office. That's an old news. But what's new now is this pushback from the Hill, suggesting that perhaps there is something of a red line that may have been overstepped here. That's according to Fed watchers, and of course the Fed themselves are pushing back forcefully in the way they haven't before this development as well. So lots of uncertainties as to how this plays out. But right here, right now, clearly the White House has a fight on their hands.
So to what extent are we seeing the pushback from the Hill actually perhaps causing the Trump administration to think twice on its attack and its pressure on the Fed?
Well, there's two versions of it. You have the version that the markets will embolden President Trump. The relatively sanguine reaction from markets so far. There are those who say there's no off-ramp in this. Once the White House are going for it, they're not going to do a U-turn on it. That's one take on all of this, Avril. Of course, the other side is that because of the pushback from the Hill now, threatening to derail the confirmation process of whoever they nominate as the next Fed chair, and raising questions about existing Chair Powell's own future on the Fed board as well. And because
you agree that lowering
the
the
market
rates will be
reaction
better for business and the
isn't
economy?
necessarily reflecting a green light for President Trump's actions. It's more reflecting an expectation on their part that ultimately this criminal indictment won't play out. Because of all of that, there is a view that all of this remains very much up in the air, and it's not. I think the important thing to say about it is, speaking to a lot of people today, Avril, is no one's quite sure where it does go next from here. I mean, both sides are dug in now. The White House is dug in, the Fed is dug in. You can have your view on either side of that debate, but there's so much uncertainty up in the air now that it's hard to see where it goes over the months ahead, other than adding to uncertainty and confusion around the Fed and the Fed's critical role as a policy-making organ within the U.S. economy.
Uncertainty indeed. And thanks very much, Bloomberg's and Curran. Now joining us is Nancy Davis, founder and CIO of Quadratic Capital Management. Now, Nancy, we are seeing the intraday moves, treasury losses pretty much stemmed, and the extent in which we're seeing the 10-year 4.2% handle able to defend that. I wonder, given the backdrop, what is your sense of the potential for escalation and what that might mean on the upward pressure on yields? What are the risks here?
Well, definitely we saw a bit of a movement, an unwind, really from what happened on Friday. It was kind of a follow-through, unwinding. The mortgage basis really tightened on the Freddie and Fannie news, and today it widened a little bit. But overall, markets are pretty, shrugging this off. These headlines about the investigation. Volatility didn't spike higher today. It was kind of a bit of a yawn in the markets. Actually, implied vol in the rate market is at the first percentile right now, really since the last 2-3 years. So even before Silicon Valley Bank in 2023, when we did see a vol spike in interest rate vols, they've fallen almost 50% since then. So interest rate volatility is very, very cheaply priced, and it didn't go up today. So I think the markets are not too concerned about the headlines, and are really pretty wait and see still.
That's the sound of an American oil company hard at work. Want to be a part of it? Listen up. Hello, my name is.
Pretty wait and see still.
That's one way of looking at it, but as our colleague at
9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Mann with David and Glass.
Good morning. We are counting down to the open of markets in Greater China. Our top stories today are Asian markets rise as the Sell America trades getting some steam, as you can see on your screens, amid concerns over the Fed's independence.
Mainland Chinese stocks in focus after record turnover helps push the Shanghai comp to its highest in more than 10 years.
Meanwhile, sources tell Bloomberg that Beijing's begun a probe into Jane Street and other foreign firms over trading in the nearly $860 billion ETF market.
Plus, President Trump announces new tariffs on countries doing business with Iran, threatening the U.S. trade truce with China, Tehran's biggest customer.
Good morning. Welcome to the China Show. Lots to get into today. And as you can see, the story across equity markets is an up arrow one. We're getting a few sort of drivers today across some of the support and the tailwinds coming through these markets, right? Number one is Japan, and as you can see, that's a really strong tailwind, 3.5%. It's reopening today. Long weekend, there's snap elections, and the early verdict coming out of investors. That's a bullish one. That's a good one for equity markets. Sources are also telling us Taiwan is coming online. The TSMC, of course, big rally overnight, 1.5% in the early goings. That we could be close to a deal, a trade deal with the United States. There's also the tech play that's playing out across the Kospi index. It also helps that the dollar has, without, like I think today being the exception, of course, has still been on a downward trend. Dollar index is coming up, but as you can see, of course, the weakness as well in the Japanese currency offsetting what I just mentioned there. We're not trading near 1 year low still on the Japanese currency as well. Now, of course, the other big headline, in case you missed that Donald Trump threatening tariffs for any place that does effectively trading with Iran. The market's simply just brushing that off as we speak. Precious metals very much in focus the last few days or so. We're seeing that, as you can see, pair back. Palladium futures down about 4%. Copper is also seeing a little bit of weakness going into the session today. A50 futures, a lot of focus is on the Chinese markets. Very, very strong session into the close here in Hong Kong. 3% up on the Hang Seng Tech Index. Separately, 1.5% gains into the close in the onshore markets. And we're talking about turnover, of course, $3.5 trillion for the very first time. Some strength coming through. As you can see in the Chinese currency. Barclays, by the way, is joining us later on. They have a non-consensus call that the strength we saw in the currency, that's not going to last very, very long. They're probably going to walk that back. Okay, just very quickly, there we go. We talked about this $3.5 trillion for the very, very first time. It's indicative, I guess, of the liquidity and ample conditions there.
Yeah, it continues to be maybe the AI play, as you mentioned, but really, I think you take a look at how Asia is being fared for the narrative that's being played out, it seems, for 2026 is that it is sort of the, I guess, safer alternative to what dollar assets are looking like today.
Oh, the South America trade.
When you talk about the Fed independence now in question with these subpoenas that we got, and certainly did send some shockwaves to, of course, central bank watchers and the like, and then you add what we've been hearing the last few weeks, whether it's the affordability concerns that President Trump seems to be addressing ahead of the midterms here. Just yesterday, it really was about capping those credit card rates as well. So certainly, is that going to be more of a focus for the U.S. side of things, domestic sort of politics, and maybe that perhaps sends a lot of investors abroad a bit?
Yeah, and I think the call coming through, I think it was PIMCO, there's a story out today that it might actually lead to higher rates. I like how our colleagues at MLive phrased it yesterday, right? Don't focus too much on Fed independence, focus on the divisions within the Fed, just because it's very, very difficult to tell really where rates are going to go and whether or not they are able to lower rates, or if we end up in a situation where higher rates because the economy would be doing better than we're expecting going into the latter part of 2026.
Yeah, that's interesting. I think Yeshi had a good take on it, why maybe markets are ready to at least shrug this off is, Powell is expected to step down regardless this year. I mean, any sort of criminal charge against him is really just tacking a lame duck at this point. So if it actually changes anything in terms of the calculus around the Fed, that could still be up for debate as well. So yes, obviously the initial knee-jerk reaction was, of course, dollar lower, which is certainly going to be a key question we're going to be asking Barclays coming up here and Lemon joining us in the next hour. But yes, the latest when it comes to Iran too, it does have a little bit of this sort of spheres of influence kind of flair to it, and maybe these tariffs that they're imposing on countries that do business with Iran could be targeting China a little bit too.
It's making before we get to this, it's really making the U.S. side of the equation a lot more complex. It's introducing new narratives that we're not really used to. And in the meantime, you have Korea, that massive headline coming out of SK Hynix that's bullish on the Korean market. You have the snap elections in Japan. You see how Japan is reacting to that. We know this earnings story that's coming through in the Chinese mainland, right? All of these things present you with a shinier city on the hill compared to where you are with the U.S. But yes, let's get to that story right now. So 25%, that's the rate that Donald Trump says the U.S. will impose in terms of tariffs on countries doing business with Iran. That's supposed, of course. Now, Tehran's top trading partners include China, India. Let's bring in our Chief Asia correspondent, Rosalind Matheson, joining us from Singapore this morning to talk us through the details of what we know so far about this and how, Rosalind, this is going to work. Yes, what do we know and what are the intentions here?
Well, there's a lot we don't know because Donald Trump announced this on social media saying, as you say, 25% tariff on countries that do business with Iran. But we don't know, is that on top of existing tariffs? If so, quite damaging potentially. When does it take effect? He says immediately, but normally these tariffs have come with a lag. That allows countries, companies, customs officials to get their heads around it and work out how it's going to work. So does it take effect straight away? If so, how is it going to work? What authority is he using to enact these tariffs? Is it the 1977 law that he's used for reciprocal tariffs? That, of course, is very much before the courts at the moment, the Supreme Court, for review and possibly to knock all those tariffs down. What impact might it have on some of these key customers, including China, India, obviously also Turkey, Russia? But also, will it change behavior if that's the goal of all of this? If you look at, for example, the penalties put on India over Russian oil, that did squeeze the Russian economy potentially, but has it changed Vladimir Putin's behavior when it comes to the war in Ukraine? So would it actually do anything to shift the course of the Iranians? Because it seems authorities there, they've been willing for years to tolerate a lot of risk to their economy in order to continue to have their hold on power.
And adding a 25% tariff.
The reason we created these initial robots was to solve a pretty basic problem. Weeds have become resistant to herbicides, and so then you have to use more of those chemicals. There's no resistance to a blade.
And adding a 25% tariff for China, I mean, that certainly is going to ruffle some feathers, I'm guessing, in Beijing. To what extent do you think this could actually disrupt or at least impact this trade truce that the U.S. has had on China last year?
Well, that's one of the big questions. Obviously, you've got this trade truce between China and the US that has been holding, all these underlying tensions that are still in reality there about the way that they interact both with business and trade and investment. But this trade truce has been holding. China's probably going to look upon this quite unfavorably because, of course, the US didn't come at them over Russian energy. They came at India instead, and that was Donald Trump really wanting to preserve some level of conversation with China when it comes to trade and not to really dent that relationship further. Is this something that could do that? But again, there's so much we don't know about this purported 25% tariff. Will it take effect? When does it take effect? How are they going to work out what it takes effect on when it comes to countries like China? So you probably see Beijing take a real wait and see approach. We're only just going off Donald Trump's announcement on social media. Do we get clarity as the US day comes back around? And does China respond more fulsomely then?
And just the latest specifically on the protests on the ground, we've heard from officials in Iran that they have quelled and they're in full control, I believe is the term that they used, security forces over what's taking place there. What do we know exactly?
Well, that's right. So Iranian officials are saying that they've got full control again of the country. This is the foreign minister primarily who's been saying this. And obviously state TV is showing pro-regime rallies around the country, but it's very unclear on the ground if those protests are dissipating entirely. Obviously, they've been cracking down extensively. There's, human rights groups are saying that 500 people, more than 500 people have been killed. But really, this still remains a very existential threat to the regime. You can see the level of discontent. It started.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ezra Lowe in San Francisco.
This is Bloomberg Tech. Coming up, NVIDIA plans to invest $1 billion over 5 years in a new lab with Eli Lilly to speed up the use of AI in the pharmaceutical industry.
Plus, Paramount sues Warner Brothers Discovery and plans to nominate directors to the board as its increasingly hostile takeover bid takes aim to upset Netflix.
And Alphabet breaches $4 trillion in market value. This, as CNBC reports, Apple has picked Gemini to power Siri this year.
And then those moves fall again. And really, we've got anxiety across the markets more broadly, Ed, digging into the market implications of what seems to be a dialing up in the administration's fight with the Fed. That is what the market tries to digest and why we see a bit of a sell America theme at the moment. Yes, there's small moves in terms of benchmarks for stocks. We're down by 0.1% on the Nasdaq 100. But we're seeing bigger moves when you're looking at what's happening in the bond market, in the dollar, for example. We're seeing 30-year yields once again pushing up 2 basis points. We're seeing the dollar on the downside. All of this as we try and bake in the macro implications. We look to CPI tomorrow, but you're looking at what's underneath the hood right now.
Yeah, the big breaking news of the last hour is that Apple has selected Google's Gemini model to power Siri this year. Reporting from CNBC citing an Apple statement, and you can see a big reaction in the stock the moment the headlines hit. It has faded. I'll take you back to November when Bloomberg's Mark Gurman reported that a deal was very close, that Apple would pay Google $1 billion per year, and that this was just an interim until Apple could get its own foundation models together. But we'll continue to track that story. Another interesting transaction in the market this morning, NVIDIA co-investing $1 billion with Eli Lilly into a Silicon Valley-based lab, split over 5 years, AI pharmaceuticals. But the details are interesting here, Karen.
Imagine being able to build an app with your name on it just by thinking about it. Beat Base 44, a complete AI creation platform. Describe what you want and watch it take shape. You can.
Details are interesting here, Karen.
And we want to get those details. We can do exactly that with Katie Greifeld. She's over at the JP Morgan Healthcare Conference. Indeed, looking at Silicon Valley, getting ever closer to the world of health. Katie, what do you make of this deal?
Yeah, this was a really interesting headline to wake up to, especially when you remember that Eli Lilly partnered with NVIDIA back in October to develop an AI supercomputer. So the details on this specific deal, as you guys run through them, $1 billion over 5 years to build a facility in Silicon Valley, basically a new lab. We don't have much details when it comes to the terms beyond that, but both companies have described this as a joint investment. And I just actually spoke to the CFO of Eli Lilly, Lucas Montarce, about what the ultimate vision is here when it comes to AI and healthcare and this specific partnership. And he said this is really about drug discovery. It's still early days, of course. They haven't built the facility yet, but the hope is that this will help basically in discovering drugs to really target and treat those really hard to treat diseases. Think gene therapy, for example. So again, early days, but some big ambitions here.
Bloomberg's Katie Greifeld just down the road at the JP Morgan Healthcare Conference all day long here in San Francisco. Less than 2 weeks into the new year, NVIDIA's already dominating the news flow. I get to Denny Fish, portfolio manager on the global technology and innovation team at Janus Henderson, and the frank reality is that NVIDIA is the top holding across a number of funds that you manage. What do you make of that relationship between NVIDIA and Eli?
Yeah, well, it makes a ton of sense to me. I mean, if we think about what's grabbed all the attention over the last 3 years since the ChatGPT moment, it's effectively been the idea of the digital manifestation of AI. But the reality is, if we think about the profoundness of how this will impact the economy over time and society more broadly, the physical manifestation of AI is as big, if not a bigger opportunity. And if you think about drug discovery and what that means for society, and then just think about how far we've come with autonomous driving, where we're going with robotics, there are all these different verticals where it makes a lot of sense for NVIDIA to be leaning into. And frankly, NVIDIA's got some of the best talent in the world. And to see these partnerships with market leaders makes a ton of sense. And, I bring it back sometimes, you get this argument of circularity. But the reality is, if you're Jensen and you have a firm belief in just how big these market opportunities are, you should be leaning in hard to this in co-investments into labs like they're doing with Lilly, or direct investments into companies like they're potentially doing with OpenAI.
With autonomous driving, a lot of people get it. I wrote about it extensively this weekend. We're going to talk about it later in the program. The go-to-market in the first instance is with Mercedes, who will use hardware and software. But with pharmaceuticals, drug discovery, research, what is the go-to-market that NVIDIA is going to pull off in the future?
Well, so far, if we think about pharmaceuticals, where we've seen the early benefits of AI have been in things like the clinical process, getting drugs that have already been discovered through that process, internal efficiencies, marketing, things like that. The real, the big prize out there is drug discovery. It's finding solutions to problems that we just couldn't get there without AI, or would have taken much, much longer. So the go-to-market is actually direct partnerships with these companies to fast forward the discovery process.
Denny, that speaks to the broadening out that we're starting to see in the market. We're also going to talk about that, the fact that we are seeing the S&P 500 actually doing a bit of a challenge in terms of returns versus some of the Mag 7 names. How much does it mean that we've already juiced the valuation side of the equation for NVIDIA, or is AI infrastructure still going to be the key watchword for 26?
Well, so far, all the data points would suggest that the investments into AI infrastructure are going to continue to be quite robust. And we would fully expect that. And so far, I just looking back, Ed was talking about Alphabet earlier, the relationship with Apple, just watching the leapfrogging effects, with, OpenAI and XAI and Gemini, that's very healthy. And as long as we continue to see that, and then bringing back to, NVIDIA now is, they announced last week, Rubin is fully in production. That is going to have material impacts as it relates to inference productivity versus training, and inference is the next big handoff. And so if you're a believer that we are now in this period where we're going to start seeing increasing deployment and of these applications, inference is going to go through the roof, and as a result, that's going to continue to sustain the investment profile. So we expect it to be pretty healthy. Now, I will say, when you're talking about the broader S&P 500, I mean, one of the theses that we've had for the last 3 years as AI has really started to take hold is this is going to be very impactful across all industries. And if you believe that, and the companies that are able to get revenue lift because of deployment of AI, but then at the same time are able to drive cost efficiencies, that should be pretty good for multiples.
Yeah.
And so I'm not surprised to see the market, sort of anticipating of sorts some of the benefits we might get from AI.
The market's also got more discerning on who has to pay for the AI infrastructure and what that costs in terms of debt, Denny. I'm looking at, again, yet another number, $3 trillion this time coming from Moody's, saying how much the data center infrastructure build out is going to cost up until 2030. I mean, McKinsey had already put $7 trillion on that number. But is there a worry as to who has to actually pay for it, Denny?
Well, of course there is. The good news is the majority of this is being funded by the hyperscalers, and they generate the free cash flows to actually be able to fulfill the commitments that they've made. And they're all playing the 20-year game. I mean, we've just seen that with, the number of, power agreements that are being struck between, Meta and Google, Microsoft, and others. And so we feel pretty good there. Now clearly, the debt markets are going to have to remain healthy. We're going to have to continue to see progress as it relates to the ambitions of these companies. But there's also something else too. When you look at those numbers, there's also a lot of double counting in it. You really have to parse it back to get to the real meat of what's necessary. And then, also there are natural governors of just how fast this can get deployed. So the deployment of the capital is going to be pretty measured. And that's what makes this very different than, say, the dot-com era, where so much capital came into areas like telecom infrastructure so fast. And it was very easy to get that stuff deployed. This is hard. You look at what's going on at Stargate in Abilene, Texas, and trying to put up 10 gigawatts, the labor that's needed, the power, just the expertise, and it's a heavy lift, and so that itself's a natural governor on just how fast it can get deployed.
This is what we were trying to pass at CES last week.
Mm-hmm.
The baseline assumption, very quickly, Denny, is that demand still outstrips NVIDIA and AMD's ability to supply. How does that set us up for this year?
Well, that's good for infrastructure, because when you're in a situation like that, and even at TSMC, for example, where you only have so much capacity, and you can only bring up incremental foundries so quickly. And so as a result, that's really good from a pricing standpoint, particularly when you're the only game in town. And for certain aspects, NVIDIA is still the only game in town too.
Denny Fish, for Janice Henderson investors, great to have you on all the games. Meanwhile, coming up, Paramount, it ramps up efforts to thwart a planned merger between Warner Brothers Discovery and Netflix. The latest in the media merger saga. That's next. This is Bloomberg Tech. I just took a shower above the ground. You know why? Because this is the Emirates A380.
The data, there's too much of it.
That's okay. SaaSfire builds models and makes decisions, so you don't have to freak out.
But we like freaking out.
We're getting so much done! From data to ta-da, SaaSfire. Paramount Skydance, well, it says it plans to nominate directors to Warner Brothers Discovery's board to vote against the approval of a merger with Netflix, of course, and the company has filed a suit to force Warner Brothers to disclose information about the proposed Netflix-Warner Brothers tie-up. Bloomberg's entertainment reporter Felix Gillette joins us on what is an ever more hostile potential takeover. Yeah. So, suing for more information, what do they want to really demonstrate to investors here?
I mean, at this point, they're choosing to raise the hostility versus raising their bid.
Yes.
And I think, they've been campaigning shareholders, join our tender offer. They've said for weeks now, our offer was better than the Netflix offer, accusing the Warner Brothers board of not being transparent during the proceedings. And now they're making this move to essentially say, you have to provide the information to shareholders so they can judge which is a better offer. And
same thing I said yesterday.
The big, most
Attention, Mauricio Ruiz, Team Grammy, Team B.
The cable assets that Warner Brothers planned to spin off prior to selling.
This is what I'm talking about.
The streaming business to Netflix.
I have to do everything myself.
Netflix offered $27 a share for the studios and streaming, spin off the cable networks. Paramount $30 a share for all of it, but basically assigning a value to the networks of $0.
Right.
This is a saga. It will play out over time. It's a really difficult question for you as editor here, Felix, but what happens next? Is there a real chance that Paramount can force a hostile takeover through this mechanism?
They're going to try, I think the shareholders at this point, a lot of them seem to be sitting on the fence, in terms of who they're going to support. I think a lot of them are hoping that Paramount would come in with a higher bid, go over the $30 a share. That hasn't happened yet. I think, again, David Ellison and Paramount have been trying to advocate for this notion that, the Netflix deal isn't even going to happen. They have too many regulatory issues. Putting aside the fact that if Paramount offer was accepted, they'd have their own issues in Europe, with the States. This continues to just get more and more hostile. And this is, the next step is this lawsuit and proxy fight with the directors.
Bloomberg's Felix Gillette, thank you very much. Another top story, DeepSeek founder Liang Wenfeng's hedge fund surged more than 50% last year, making it the second best performer among China quant funds. The strong performance helped boost the cash available for DeepSeek itself. Let's get out to Bloomberg Tech executive editor Peter Elstrom. There's the Bloomberg story, right, which is about a quant fund's amazing performance. But in the reporting, it's super clear. The read-through that people are making is that the returns on that, the earnings from that fund's performance, can be taken by DeepSeek's founder and used to give DeepSeek a bigger budget for research and deploying its models.
Right. That's exactly true. Yeah, there's a finance story here, but there's also a tech story. And the finance story is very impressive. The hedge fund high flyer that was really the place where DeepSeek was born had a great year. Returns were 57% on average across their various funds. That is very good for the founder, Liang Wenfeng, as you mentioned. It's good performance compared with the other quant funds out there, but it also gives him a much bigger checkbook to be able to go out there and make new investments. Now, that probably would be in DeepSeek. DeepSeek has gained a lot of momentum since a year ago when they had their big breakthrough, dropped the bombshell that they had invented this LLM for a fraction of the cost of OpenAI's with a very similar performance. So now you can see the founder invest more money into DeepSeek, perhaps chase after a little bit of the capital-intensive projects that we've seen in the U.S. in particular. We haven't seen those kind of investments in China so far. Or he could invest in other kinds of AI initiatives that may not be directly the same as DeepSeek.
Because the whole claim about DeepSeek was it only cost them $6 million. And the theory in this particular reporting is that maybe they're getting revenues of some $700 million. That could go a long way if you're thinking about the costs of doing the business here. Peter, talk to us about why they're able to outperform so much. What is it they're betting on? How are these quant funds managing to be so superior?
Well, partly with DeepSeek early on, they were able to do this because there were a lot of constraints around the AI initiatives in particular. And we've written a fair bit about High Flyer in the past. They have these quantitative techniques to be able to outstrip their peers within the China market. They were the number 2 fund, as you mentioned. Also, the China market has been on fire. There have been a lot of investments in other kinds of AI models. DeepSeek hasn't gone public yet, but 2 of the other AI models within the country have gone public, giving them a lot of momentum here. So the market's been very strong. They've been able to take advantage of that. But again, as you say, they now have 100 times as much money as they used to start up DeepSeek in the early days. What are they going to do with that money? How are they going to invest it? They're not talking about this publicly, of course, at this point, but we would expect more things to come from High Flyer and DeepSeek in the future.
I mean, just think Minimax went public on Friday. It was up 100%. It's up 15% again today. Peter Elstrom on All Things Asia. We so appreciate it. Thank you. Coming up, a bit more on Asia. Could Chinese EVs actually dodge tariffs in the EU? We're going to discuss the global electric vehicle wars. Stephanie Valdez-Streety from Cox Automotive. That's next. As a Bloomberg Tech.